Hello everyone, this is Juan Sarmiento and today is Wednesday, March the 25th. Okay, first let's look at what we got filled today. I see 3 diagonals and 1 short put. It would be interesting to see what that is all about. Let's analyze the trade. And we're right here making a little bit of a profit. Notice the high volatility, 72%. So we are selling a lot of price. Imagine that this is May. The stock is trading at $45 and we got $5.40 out of it. If I were to buy it back, right now it would be $6. So there's a lot of variation there. So all you have to do is sit tight and let it expire worthless, or at least somewhere. Imagine that there is all this room from the strike price to the break-even point. Let's set the slices to the break-even point at expiration on May the 16th, and the probability is 56%. Let's add one slice at today's price. So we have like 14% of the price is my bargain price. Okay. So I got a lot of money from just simply doing this. The downside is that if it goes below the break-even point, we end up with the stock most likely. Okay, but perhaps that will be okay. All you need to do is keep selling calls all the way to zero in the price of the stock, and you still will be all right. So that's the goal there. The market has been going down so much that the volatility is huge, and it makes sense to catch those bargain here and there bargains. So be careful. They need to be good stocks and stocks that would survive the downtrend. Okay, and let's go and look at the other ones. That's PANW. That's a diagonal. Analyze trade. And let's deselect that, and you can see here that it's at 0 here. That's the current price right there. It's where we are. So we made a little bit of money today, almost $60 on that one. That is Palo Alto Networks. INSEE also made a little bit of money on that one right here, $55, and the other one is NTAP. Folks, I'm not convinced that the market will recover at all. I think that we are going to have a bit of a bounce. I want to take advantage of that, but at the same time, you have to be very cautious to be able to take your profit when you have it, or even invert the position. When you have a vertical, you can always invert that, but we'll see that when the time comes. Okay, let's see. Go to the monitor tab and see who is performing well. Today, presumably, I made $400, paper profits, of course, and my total for the year is 6,300. Remember, we started at about 27,000. We had lost about 3,000, so overall, the account has gone up 35,000, so that we have about $5,000 in profits so far, and this is obviously paper profits. Okay, you can click here on P&L percentage right here, and for example, this Costco here, you might want to get out of because we have it labels here 100%. Costco's been going down, ironically. Let's look at the chart. Oh, very interesting. I thought Costco was going to do well in this market because the Costco stores supposedly have been having big lineups. Oh well, here it is. We can get out of it. If we were to sell right now, meaning close the position, that is, we would have a profit of $242 out of a potential $285. Now look at the difference between 280 and my break-even point, or my break-even point is here at 312, but the maximum profit is here at 309. So it's a lot of room here. Granted, the markets have been bouncing very strongly, so this could do well as well, but I'm gonna let it be. Okay, we have until April. Let's see how many days. Until April the 17th, you have 23 days. So every day that passes, we make money by virtue of theta, meaning the consumption of the about $1 here it says. Okay, it says positive theta means with every passing day we make 93 cents. Okay, but also if the volatility continues to decline, then we would make all the money. In other words, let's take a look at this some other time. Okay, but obviously we have to be aware that Starbucks, since the open, we have $306, and today 261 looks pretty good. Let's see what the trade looks like. Okay, this is a diagonal, and the diagonals will do well as well because of the huge volatility. Okay, so this is why I chose them. Big volatility, big diagonals. And if we were to get out, we would end up with $308. Let's take a look at, yeah, I think the stock could continue to go higher. And we're in good shape here, so let's leave it alone, okay? All right. I think those Palo Alto Network, 71% after just entering after one day. $60, leave it alone, okay? Qualcomm, QCOM. Very nice looking chart here. We are here, 63. Yeah. You will see what we can do. These diagonals are kind of very, very flexible in what you can do with them. Obviously, the simplest thing would be take your profit, but sometimes it goes over to this side and then eventually comes down. It stays up here and makes time and then comes down and gives additional profit. So I'm going to let it be as well, and tab, we just enter, and insight as well. Big lots, let's see, analyze big. Yeah, it looks nice too. The stock came down a little bit, but no harm, only $19. Okay, I don't really feel like changing anything right now. So I'm going to enter a few trades here, and I have a list of them. Let's start alphabetically. CMI. 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 That's the chart of it. All right. Remember, I have a certain scan that I pick these stocks from, and that's what I use. So for the time being, you're going to just enjoy the results, and one day there will be a course on how to do this. For now, we're just enjoying profits. Okay, here's a trade. It's also a diagonal, and I'm investing here $342, which matches my account, which is now $35,000. Okay, so remember we started with $300 trades. Now we could do $350 or thereabouts. It doesn't need to be exact. My maximum potential profit is $511 if it was to land here precisely at the sweet spot on the day of expiration. We are likely to get out of that long before it happens. And so this is my diagonal on CMI. If you want to see what that company is all about, click on fundamentals and say Cummins Industrials, and then you read design, manufacturers, services, diesel, gas, etc. So they're in the energy sector. Okay, you can read all about it if you want. For me, it's just about the technicals, not the fundamentals, but you might want to go through that. Okay, so let's send that trade off. Confirm and send. My second trade in alphabetical order is DE, deer. And on this case, I also have another diagonal risking $451. That's a little more than 1%, but not by a whole lot. And you can always avoid it if you want, if you think it's too much. My maximum profit would be $742 if it was to land in the sweet spot. And that's a diagonal. 125.30 strike prices. Notice that I'm using puts in this case. You can use puts or calls as long as you have this configuration. The configuration tells you whether you're bullish or bearish, and they're both sort of neutral trades. You can set the slices to the break-even point to see how probability you have. Make sure here you put the date of the earliest option, which is sooner to expiration, and that will give you your probability of making at least $1. Let's send that off. Very high probability. The volatility being so high, it helps. Okay, next, EAT. Das Brinker, I think. Brinker, is it? Yes, international. And they own some restaurants, some familiar names, I think. Chili's, Mexican type foods, baby back ribs, fresh Tex. Let me see. Go through there if you wish. I just am slightly curious. Not that it makes any difference to me. Um, but it's a company that has performed well in years past. It's been beaten down to $15 a share. And this is what I could enter all kinds of trades. I think the ideal here is the selling puts. Look at the volatility. It's almost 200%. Do you think that that's going to stay there for long? No. And it is $2.80. The stock is trading at 15.48, so $2.80 less. We are talking somewhere in the 12 to 13 range, so that's a bargain price. Imagine that you will own the stock. Don't go too far. I'm investing here $1,500. Okay, so you realize that when you short one put, it's equivalent to owning 100 shares. Only you don't get to make as much money. There is no indefinite profit. There is a limited profit. But the reason why you want to do this is because you end up with a high probability. Okay, this is 53% probability of success. And if you end up with a stock, guess what? You did it at a bargain price. Okay, so we're not gonna do many of those, but we have already two. And this situation is fine because the volatility is so high. But we will get out of them in good time because we don't want to end up with a lot of stock. Or perhaps you do. Perhaps you're doing this on stocks you love that have been beaten down. Next and last is ETR. And this is another diagonal. And I'm investing here $223 to make a maximum of $400. We can do two of these. And that's $446. I think I'm gonna do that. I know it's a little above the 3,500, no, $350 maximum, but it's very close. That's it. And so now we have a pretty good sized portfolio here. So how much cash we have available? $24,000. So we have a lot of positions and about a little over $10,000 invested. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.
For this video. Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.PutCallGenie.com. Then go and subscribe. You could simply subscribe as a visitor. It is free, and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.